Has been unseated as the top gold manufacturer in Africa, losing its status as continent leader to Ghana. The country that led global bullion production for years and dug up about half the precious metal extracted is now the second largest gold producer. So what does this all mean to the South African economy and the markets? Let's get an interpretation of that with Owen Khumalo, who is the CEO of Weaver Investments. Thank you very much for coming.
Thank you, Colin. Thanks for having me in studio.
All right. So this is a hot and cold kind of scenario. There has been an uptick in the price of gold internationally, but yet on the other side, South Africa gets toppled by Ghana as the #1 producer. What does this mean?
Well, Colin, if I were to characterize the mood of the markets both locally and globally, there are two phrases I would use: heightened volatility and uncertainty. Now, in times of uncertainty, investors, what they do, they go to a haven of safety, and gold has always been considered as that haven. So hence the spike in the gold price. But if you look at the heightened volatility that's happening offshore and locally as well, so you've got Brexit, uncertainty around Brexit and how that's going to play out with the change of Prime Minister in the UK. But you also have the trade wars that are ongoing between the US and China. Almost market participants and market commentators and investors have to watch Donald Trump's Twitter account to see what he has tweeted and how that's going to impact the markets. We've got a bit of reprieve on that front because we're waiting now for the G20 summit meeting at the end of the month. And Trump is saying, well, if Xi Jinping of China doesn't want to meet with me, then I will increase tariffs on Chinese products. So it's that context which is bringing a lot of uncertainty on global markets, and that's filtering into local markets as well. I had an interesting meeting with one of the asset managers we use in our multi-manager portfolios just last week, and we were getting a regular update, a quarterly update from them, and they said, I asked them a very simple question. So what's the size of your assets under management now? I said, well, Owen, it's somewhere around 50 billion rand. I said, well, but surely you can pin a number to that. I said, well, the difficulty is that when Trump tweets a negative tweet, the value of our AUM goes down by quite a few billion. So you can see the impact that is having on our local markets.
So now, given that in South Africa there is a problem of uncertainty where people are talking about, is there ever going to be implementation? And this implementation, how does it speak to the economic outlook, the business confidence, as well as the market confidence in as far as investing in South Africa, creating those much needed jobs and so forth?
Yeah, I think that's the biggest challenge we have. So the uncertainty we're seeing on the global front, that's translating into our local markets and our local economy as well. So our local politicians, not to be outdone by what's happening offshore with the US and China, they've added spice to the debate by debating the autonomy and the mandate of the Reserve Bank, for example. And we saw what that did to the rand and to business confidence. So the rating agencies are becoming jittery as well. So Moody's, which is one of the three main rating agencies which hasn't downgraded us to sub-investment grade or junk status, their next review is due in November. And they're saying, well, look, this uncertainty around the mandate of the Reserve Bank and its autonomy and its independence is not good for the sovereign rating of the country. But add to that, all this is happening in an environment where GDP growth is actually negative. For the first quarter of 2019, we saw GDP growth contract by 3.2%. So if we have a consecutive quarter in the second quarter of negative GDP growth, then we're technically in a recession. But the challenge for the asset managers, and talking from our industry's perspective as asset managers and allocators of capital into the capital markets, is that we are in a low return environment. So there's low growth, there's uncertainty because of the convergence of politics and the economy. But the environment, the market environment is such that it's becoming very difficult to eke out returns out of the markets. So we are having as asset managers to look for alternative sources of alpha to actually generate good returns for investors. Now, you mentioned the uncertainty on policy. That's one of the things that heading sentiment and and making foreign investors jittery. So we've just come off an election, and investors are looking for policy direction. So are we going to get a reform-focused cabinet? Well, we'll have to see what the new cabinet stake is on and how well they will implement those reformist policies. So yeah, there was a wait-and-see game in a very uncertain and volatile marketplace.
What do you make out of the assertion that when you say looking elsewhere could be in search of an alpha?
Yeah.
What if it's regrettable based on the argument that when the chips are low, that could be the best time to enter? And in South Africa, if it's a low-performing economy, perhaps this is the time to invest, and then you can get good rewards as the projection and the pricing in of the economic outgrowth that has been projected to be even though reviewed, promising, so to say, in the third and the fourth quarter of 2019. Yeah,
that's the challenge we have, though. So with the negative GDP growth for the first quarter, projections for the full year for 2019 are being revised downwards. So where we expected to grow it around depending on which analyst or economist you speak to, between 1.3 and 1.5%. For 2019, we now projected that we'll be struggling to get to 1% GDP growth. So in that environment, the alternative sources of alpha, well, we cannot rely on the traditional asset classes. Because if you look at our equity market on the JSE, in the last 5 years, that hasn't delivered exciting returns. Even cash has actually beaten equities. So as investors, as asset managers and allocators of capital, we're having to look at alternative assets. So infrastructure funds that focus on real assets like unlisted equities, for example, private equity, but also property investments, direct property investments, which have got a low correlation to traditional asset classes, and they act as a hedge in this environment of low growth and low returns.
So from where you're sitting, on paper, do you think that the South African economy could turn around in the not so distant future, according to the projections, given that most of the time this uncertainty makes everybody to back down and pull off? And then do you see that there could be a second chance in the second quarter that the GDP figures can come out promising?
It's very difficult in this environment to be optimistic, Colin, because there are a lot of headwinds that we have to deal with. And again, as I mentioned shortly, in a short while, I said, well, look, the headwinds that are coming from offshore are impacting emerging markets, and South Africa is not spared. So we're at the mercy of what happens offshore. So we'll see how Brexit plays out. We'll see how the trade wars play out, because those have got huge impact on our economy. But what we can do as a local economy and as a country is to stop scoring on goals as well. So we're hitting ourselves, like the debate around the Reserve Bank. That's not helpful. So yeah, it's to answer your question, I'm not optimistic on a quick recovery in terms of GDP growth in the distant future.
Okay, thank you so much for your time.
Thank you.
Owen Khumalo is the CEO of Weaver Investments.